Hey, what is going on, my friends, and welcome back to another video on the channel. Well, of course, as you can tell by the title, today we are looking at some Ada Cardano. Now, there's a pattern that's been repeating for Ada Cardano that is almost something as a cheat sheet. It's a very, very high success rate pattern right now. And of course, I wanted to share that with all of you, being that it does seem to work, and I want you all to take a look at it. Let me know what you think and if you've used this before yourself. So what this is going to be, again, is something like a cheat sheet. What we're looking at is going to be the 4-hour charts for Ada Cardano, and we're going to be looking at our Bollinger Bands. Now, something that I've noticed with our Bollinger Bands on the 4-hour charts is that we have seen that the price will come down to establish support on top of our lowest, our lowest point of this envelope, this Bollinger Band envelope between the top band and the bottom band. Once that support has been established and we clear this 20 simple moving average in the middle, this 20 simple moving average that runs in the middle of this Bollinger Band, and get a full close above it, one close above it, there has been a very, very high success rate of this then working its way back up over the next about day or so to the top of our envelope. That top of that envelope representing the moment in which you can take profit, or if you're not looking to short-term trade it, this being represented by a great time to increase your long-term position, of course, in my non-financial advisor opinion. Now, I know that may sound a little wild, and I know that may sound a little bit too easy to predict, but let me go ahead and show you guys how highly successful this has been. So if I do go ahead and we just kind of like look at a few different examples, let's take a look. So the price comes up, we finally get a close right here above our 20 simple moving average. The price then goes up over the next 4 hours about 3% to go set that high. Let's look at another example. We come up, we clear this 20 simple moving average. Once we get that close above it, the price then comes up 9.58% to the top of our Bollinger Band envelope to then set that high before it does come back down. If we go back out to another example, the price did consolidate a little bit at that 20 simple moving average right here. Boom. But even though it consolidated over time, as long as it held that 20 SMA, simple moving average, as support, we then came up after finally getting a close here. Boom. And once we interacted with it, 7.73% over the span of 1 day. Now, if we do go ahead and just look at more and more, you will start to see how effective this is. The price has to come down and touch it. And after touching it, once we get a close above it, there's been an over 85% chance of it coming back up to touch the top of this Bollinger Band envelope. For example, this is another one where we saw the price get that close, and then from there, we can see the price going up 4% over the span of a few hours. Now, when the price was in downtrends, there were a few minor times in which we would see this be a little bit ineffective, but not many. Genuinely not many. So this was one of the only recent times that I was able to find that this happened. We saw the price go ahead, we set that close above that SMA, but immediately fell below it, and then we started to go down. So what I would say about this one is that if you want to utilize this and give it a try, as this is another example, we touched the bottom, we came up, cleared that SMA, got one close above it, boom, pushed up to touch the top there. That if you're going to do it, setting a stop loss below this SMA seems to be a highly effective method to cancel out any potential losses if it does start to roll back over. This seems to be an incredibly effective method of trading, and it's something that I'm going to start doing. Of course, I will update my Patreon members on this one as I do all my trades and buys and stuff in there, so definitely do go check that out. But now that I've noticed this pattern, I'm going to give it a try. I'm going to use it. If any of you have used it, please let me know, but it does seem to have an incredibly high effectiveness rate right now. So with that being said, that's going to be the cheat sheet that I'm looking at right now. Of course, we are going to dive, of course, just into our general TA update where we look at what the price is doing, but I wanted to share that with you all because it does seem to be effective. I'm not a financial advisor. I am a random dude on YouTube who's pointing out stuff that he sees on his computer, so please take this all with a grain of salt, but it does seem to be very interesting and worth checking out. So with that being said, what Ada's price is doing itself is a very healthy retracement back down to this triangle, and I'm okay with it. I think this is a good sign, and it does just show that the price is moving in a very healthy manner. So what we're seeing right now is that we were within this triangle right here. We worked our way to the apex before, of course, seeing a breakout to the upside. Now, it's incredibly common that when we see these breakouts that we will come back down to revisit this line, reestablish it as support before working our way back up. That's quite common. It's not unusual in the slightest, and we like to see it because it's an indicator of healthy price movement. But if we do want to see it going back up forward, as we just said, what I want to see is that we go from swing high of course, as per usual, down to swing low where we revisited, and we want to clear our $3.05 mark, our 0.786, this very last Fibonacci retracement zone. And of course, you guys do know that if we are able to do that, if we clear $3.05, do look for the price to start to climb back up to about $3.23, which is that same price target area in which we had off of our also long-term swing high, swing low. As you can see, we were aiming for this region, $3.29 to $3.23. And so that does put us right up to nearly closing out on that short-term trade there. And so in terms of, what we're looking at in the short term, look to see if we can hold $3.05 once we do surpass it. We come back up, we want to surpass it, hold it, and I'm looking for this thing to go to $3.29. But if we do fall back down, and we do fall back down below this trend line, do definitely expect that we start to interact with some of our EMAs. The first EMA that is likely going to be interacted with is the 100 EMA on the 4-hour charts, and I think that would happen relatively fast. So if we do lose this downward trend line, don't worry about $3.29. We need to be more worried about where we go on the downside, and I think our first pit stop is going to be at the 100 EMA on the 4-hour time frame. So just keep an eye on these levels. Again, you guys do know there's not much technical analysis that can be done when the price is in price discovery mode, but what we can do is look at extension levels, Fibonacci retracements, and much more. And at the moment still, we're just looking to see it clear $3.05 to $3.06. So with that being said, once we do get a move, or once I do start to use this trading strategy that we talked about, our little cheat sheet, I will keep you guys as up to date as I possibly can. Of course, if you do want to stay tuned and get these videos the moment I do post them, please make sure that you turn on the post notifications. It helps out my channel a lot. If you could also subscribe and like if you do appreciate the content. But with that being said, I will see you all very, very soon in the next video. Peace.